The more I listened to other people about it, the more I read about it, the more you learn, actually, this is quite necessary for protecting your future wealth. And at the time that we started talking to him about it, there wasn't any Bitcoin ETFs in the world. So it's no different to any other ETF, right? It just so happens to track Bitcoin. That's specifically the reason we set this whole business up. Because let's say my dad came to me 5 years ago and said, oh, can I buy a bit of Bitcoin? No chance. There's no chance he would have been able to, and he then put himself at risk. We want people to be safe. We want them to see it as a long-term investment, and we want to bring comfort to their door so they can access it in the way we think is a comfortable way for them to do it. And I think an ETF that fits in a SIPP and an ISA is exactly the way 95% of the population will end up holding Bitcoin. The regulatory environment in this country is behind most of the world, but only now, 16 years in, are the big corporations, the countries, and the big demand, they're only now coming in. And we've only got 5% left of the Bitcoin to be mined. So the flows in the next decade are going to absolutely dwarf the flows in the previous decade. And so I think if you've got a finite asset, what's that going to do to it?
Hi Pete, welcome to the Bitcoin IFA podcast.
Thank you very much. Thank you for having me. It's been great to be here.
All right. Well, so Pete, you launched the UK's first spot Bitcoin ETF.
And Europe's first.
Europe's first. Wow. Okay, we'll come on to that. But we always start with the same question, which is everyone's against Bitcoin until they're for it. So what's your Bitcoin story?
Do you know what? I don't ever think I was ever not for it. I was almost sort of, a little bit maybe ambivalent, to be honest. And I saw the crypto. I think I first really noticed it 2017. I worked with a guy and he was obsessed, like utterly obsessed. And it was only a few of us in the office. And we basically didn't do any work other than just watching the crypto markets on a daily basis during that unbelievable bull run. And I think that was my first foray into it. And I felt like it was just, picking roulette numbers. Like I didn't know what they did. I picked a load of different cryptocurrencies. No idea what they did. They all went up, and I'm like, this is fun. And then everything just crashed back down to nothing, and then I sort of lost interest a little bit. And then it was probably then 3 years after that. So I was, very happily running my financial advisory business. I loved it. I loved my clients. I loved helping people. I loved solving people's problems financially to help them give them the actual life they want. And I think that's more rewarding sometimes than the remuneration of it. But then one of my clients, he owned a crypto brokerage. He worked at a fintech. I looked after all the employee benefits and all the directors of the business. And we got on great. And then he just said to me, "Do you want to help me build a crypto fund?" And I was like, "Cool, sounds awesome." Like we had no idea, I don't think, of where we were really going to go with this idea. And I probably think that we started building Jacobi, and to do a Bitcoin ETF. And I think even at that point, I wasn't like, Bitcoin's the future. And I just think this is a really exciting thing to do. And it's a brilliant asset class that people need to be able to access if they want to in a secure way. But it took probably a little while for me to then really get in the weeds of Bitcoin to think, well, actually, if this goes to a certain level, there's no return. And I think we're well and truly past that now. So I think there wasn't like there wasn't an anti-Bitcoin part of me at any point. There wasn't really a super duper pro Bitcoin is going to change the world for all these other reasons other than make me some money situation. But I think the more I understood it, the more I listened to other people about it, the more I read about it, the more you learn, actually, this is quite necessary for protecting your future wealth, I think. And that was the point for me. It was more like a gradual digging down the rabbit hole than a falling into a sinkhole one for me, really.
Wow, so you've touched on a few things there. So you had a classic financial advice business before transitioning into the Bitcoin ETF.
Yeah, so I started working in the city the very day Lehman crashed. It was my first job out of uni. So I finished uni. I did a marketing and management science degree. I went traveling for a few months, and I came back and I started a financial advisory business and I only applied for this because I was applying for loads of jobs after uni, and I worked during uni. I did a placement year at Nissan's R&D headquarters and did literally nothing for a year because I think they just had people there just to say they were helping students, but we didn't do anything. So I basically just used to sit and watch the stock market ticker on the BBC all day, every day. And that's when I started to really, really enjoy finance, investing, even though I wasn't doing anything academically in that. It was all I was really interested in, to be honest. So I then applied for a lot of finance jobs. And so I got this job working at a company called Welbeck, which was a proper old school boiler room situation. And the first 3 months of when you're working there, you get 1,500 quid a month to make sure you can get there and back. But after that, you're on your own. And so you either made money or you didn't. You were allowed the phone, as all you were allowed to do was cold call from 10 till 1. And if you didn't make 20 calls or 3 appointments, you basically weren't leaving your chair to go for lunch. And it was a real old school um, get on the phones, book people in, do a good job, get a referral. And I actually loved it. And that company, we did really well. That company, we got bigger and bigger and bigger. Um, and then I think at one point it was like 100 of us. But if you imagine 125-year-old, predominantly lads, all with good sports backgrounds, predominantly, uh, all doing pretty well. And if you were doing well, the money that you could make was really really good, especially for somebody your age. And people that didn't do well generally left because they didn't make any money. So you ended up with a group of lads in their mid 20s, all doing really well, all working really hard, all now really quite independent young men. Because if you have to do well at work to make money to be able to pay for food, well, that gives you a real sense of independence. And we were smashing it for a good few years. And it was a brilliant, brilliant situation for me to be in. That company then got quite big, and I'm sure you've seen from your work in the financial advisory world, there aren't really many like massive financial advisory businesses. There's massive financial advisory networks, and they kind of sort of try and keep you sort of contained a little bit, because if you get too big, like how are you controllable? And we just were huge. And then it got to the point where one team left to set up their own business, so everyone sort of jumped ship and we set up our own businesses. And so I was doing that for, I guess, I don't know, a good 14, 15 years, before we even started working with Jacobi. And I genuinely loved it. If Bitcoin ever came to me, I could have happily done that for the rest of my life.
Okay, so wow, you had highly incentivized, and you were essentially taught to overcome obstacles and taking no for an answer.
Yeah, I think not just not taking no for an answer, but doing it in the right way, though. So I think if you, so we had a clear objection sheet, right? So if I cold called you, I'd know exactly what my script's going to say, and I know exactly what your objections are going to be, and I know exactly what the answer to those is. So that makes you, as long as you know you're approaching the right kind of person, and you know you can help them, it doesn't really matter what they say, because it's usually just to get you off the phone, right? If someone cold calls me, they'd have to be phenomenal to get me to finish the call, because I've just got stuff to do. And every now and then you just catch somebody, and if you give a compelling reason for them to talk to you, as a financial advisor, you could probably help 99% of the people you speak to, because every single adult has to deal in some shape or form with financial planning. So, and most don't really, right? So, if you are cold calling people, back in the old days when you could, and you know that you could, highly likely help their situation, it doesn't matter what they kind of threw out as your reason to get off the phone to you. You had a good answer for him. And I think the answer is that if you want to financially be better off or not. If you want to be financially better off, I think I might be able to help you with that. If not, then you'll come and see me. Worst case scenario is you find out you're in the best place you could possibly be ever, and I'll tell you there's nothing I can do for you, and then we'll go our separate ways. And that really, like, how can you say no to that?
No, that's very true. And how would you say that sort of objection handling has helped you with the launch of your Bitcoin ETF?
Hugely. So we faced problem after problem after problem after problem, whether it be a regulator uh, saying, this isn't right, or, we don't agree with this, whether it be the listing venue, for instance. So typically, when you launch a fund, you would do it and you'd list it in the same country. So let's take the American ETFs, for example. The SEC regulate both the exchanges and the funds. So the very, very second they say you are approved, well, bang, you're listed. So it was different for us, because to create an ETF in Europe, typically it would be under a UCITS regime, and you would have no crypto in it. You'd have 10 investments in it, and typically it would come out of Ireland or Luxembourg. Well, Ireland and Luxembourg weren't interested in talking about Bitcoin ETFs back in 2020 and 2021. So we had to go and find a regulator you could actually have a conversation with that was an innovative regulator, but also could help you get into a jurisdiction where you would want to list it. So we landed in Guernsey. And I think so Guernsey and Jersey, it's kind of their job to be innovative, but regulate robustly. And so that's what they do. So we ended up being introduced by a friend of mine who used to be a financial advisor with me, to a chap who was the chairman of the Guernsey Investment and Fund Association at the time. And his attitude was, let's give it a go. Guernsey had never done an ETF and they'd never done a crypto fund. And at the time that we started talking to him about it, there wasn't any Bitcoin ETFs in the world. So you kind of had to just, not make it up as you go along, but kind of have your best guess at what it should look like, then refine it and refine it and refine it. And so when we then tried to list it, given that nobody had ever taken advantage of the regulations we had taken advantage of, the legal team at Euronext in Amsterdam almost didn't believe it was possible. And so that was such an enormous objection. And it would have basically just crippled the business and, wasted the time and money we'd spent getting this, fund approved. So my objection handling mode switched at that point. And I basically just, I just became that guy again. I'm like, no, let me tell you why this makes sense. And that was really, really important, I think, at the time. And we managed to turn them round. We managed to turn their legal team round, to the point at which they said, okay, well, you're right, we're wrong. Our legal team's wrong. Your legal team's right. And they agreed that, yes, you can list your Bitcoin ETF in Amsterdam.
Amazing. And when was that?
So we finally listed. So we were ready to probably list 2022, just as the crypto market absolutely died. So it would have been commercially suicidal, really, to have listed at that point. So we then finally listed our ETF the year after, in August of 2023, because we kind of knew the Americans were going to list their Bitcoin ETFs, and we wanted to basically beat them.
Yeah.
And so we listed it in the summer. Worst time you could list a fund is in the summer, when everyone, especially European, everyone's on holiday. So it was not a great time to list it, but we thought we knew the SEC were going to probably approve the Bitcoin ETFs. We thought it would be towards the end of 2023. We knew it was either going to be that or January. So we thought, if we're live, then England, Europe beats America, and we got all Ryder Cup on it.
For the win, yeah.
Mm-hmm.
Many years ago, I used to work for a media agency, and I worked on the Ubisoft account, which is a French video games producer and developer. And when you're booking television advertising, the lead time is typically about three months ahead.
Yeah.
So if you're booking for December, which you would be for a video game to release, you need to be signing off your TV advertising for Christmas in August. Trying to get hold of anyone at the French HQ in August. They're all in the south of France.
Yeah, impossible. Yeah. They take a full month off.
Okay, so talk us through. Look, I actually don't know too much about ETFs. So talk us through end to end. Like, what does it look like in terms of creating, listing, and then selling a Bitcoin spot ETF?
Okay, so it's no different to any other ETF, right? It just so happens to track Bitcoin, right? So that's one of the things a lot of people find it hard to get their head around. So if we were tracking oil or gold or the S&P 500, the ETF structure is the same anyway, right? So you have a regulated manager. They're in charge of managing the administration and the management of the fund. We have a custodian who, in this instance, looks after Bitcoin. So we use Zodia, which is Standard Chartered. They've got 5 massive owners now, and they're absolutely smashing it, to be honest. So they look after the Bitcoin. Then you have to have an index provider who then does the pricing of it. So we use Wilshire, which is a huge index advisory business globally, and they were looking to get into the digital asset space, and we were a great stepping stone for them to do that with, and they've been brilliant for us. Then you need, just like any other exchange traded fund, you need an exchange to go and list on. So it's listed on the Euronext Amsterdam exchange. And at the minute, so we can't sell to retail. The Guernsey regulator has made that very, very clear. They thought when we listed it, it's a very volatile speculative asset. And back in 2020, 2021, they were right. And so the last 4 years has been really, really progressive with the Bitcoin market. So we're looking to, you know, say that Bitcoin is a mainstream asset now. So, retail investors should be able to buy, with advice, hopefully. Um, so that then is listed on the Euronext stock exchange. And then any trading platform like you would use anywhere around Europe or anywhere in the world, as long as your trading platform can have connectivity to Euronext, our ETF is available. And so if let's liken it in this country, if you were on a Hargreaves Lansdown, for instance, you would go in, there'd be a massive list of all the ETFs that you've got available to you. You'd go in, you'd pick what you want to invest in, and then that's it, done. You put your money in, and then all the work happens in the back end. So the market maker is the guys that have the Bitcoin. So they take the money, they buy the Bitcoin, they then store the Bitcoin with a custodian, they then deliver the units of the ETF back into your trading account. And then there's a transfer agent. So BNY Mellon then have a big registry of who everybody is. And therefore, it's all stored in a traditional way, just like any other investment is already stored. So what we've basically done is taken away all the hurdles of somebody who isn't like a tech-savvy crypto-native investor to hold Bitcoin. So you basically worry about nothing other than will it go up or down? That's it.
Which is it's so good because I was a financial advisor for a hot minute, and but I've been in Bitcoin crypto for 5 years, and I would go and speak to clients who are broke. They're 55, having to access their pension already. They've got less than 100 grand in it, and they're having to access it already because they're broke. And I was thinking, this thing in theory needs to last you until you're 90, 100. You need Bitcoin, but there was no way they could deal with the technicalities of buying Bitcoin through an exchange.
Yeah.
I mean, even just yesterday, I was moving some Bitcoin and getting rid of some of my shit coins. Finally, no, they were in a bit of profit, so I was converting those over to Bitcoin, cleansing myself. And I went and used a new exchange that I'd never used before. And I'm relatively tech savvy, and I was like, this is complicated. Really had to focus. And the average retail consumer is not even going to be able to figure out the exchange, let alone cold storage, multi-sig, cold wallets, etc. And so something like a Bitcoin ETF that's accessible within their tax wrappers would be absolutely perfect for those kind of people.
That's exactly why. That's specifically the reason we set this whole business up. Because, like, let's say if my dad came to me 5 years ago and said, "Oh, can I buy a bit of Bitcoin?" I'd be like, "Go on then. Let's see what happens. Like, can you do it? No chance. There's no chance he would have been able to, and he then puts himself at risk." Like just the other day, for instance, I got a text from Coinbase saying somebody from Nigeria had opened my account in Nigeria. Now, fortunately, I don't keep anything on Coinbase because it's all in my ETF. But imagine, imagine if my mum, for instance, got a text from where she keeps her Bitcoin saying someone in Nigeria has opened it. She would probably just die straight away with a heart attack. And so it's just not right for some people. For some people, it's absolutely perfect. And so what I heard, I think Michael Saylor said this recently, that you need to take Bitcoin to somebody's door where they're comfortable being. And so you need to create products that make somebody comfortable but can access Bitcoin. You can't just say to everybody, you need to do it in your own wallet. You need to look after it yourself. You need to get multi-sig. Because 99% of people, from my work in a financial advisor, most people don't give a shit. Like, they've got so much to do on their day-to-day life, their own families to deal with, their own job to deal with. They don't have time or inclination to care about just buying how much do you have to struggle to get somebody to put 20 grand in their ISA? Like, that is an absolute no-brainer. So to then try to get that person to then learn how to safely hold Bitcoin, you're barking up the wrong tree. And so that's why we need to create products that can go to somebody else's comfort level and meet them there. And then everybody can then have a product they're comfortable with, and they can then access Bitcoin in a way that doesn't mean they're going to then shit themselves and sell it. So I think if you saw back in February, when there was that really sharp crash, the only Bitcoin holders that sold from, I think this is Glassnode's data, are people that had held for less than a year. And even though there's a really, really brutal crash, anyone had held for more than a year didn't touch a bean. Nothing happened. And that's what you want to avoid. You want to avoid new people being uncomfortable, getting in at the wrong time, it going down, being disheartened and leaving. That's not what we want. We want people to be safe. We want them to see it as a long-term investment, and we want to bring comfort to their door so they can access it in the way we think is a comfortable way for them to do it. And I think an ETF that fits in a SIP and an ISA is exactly the way 95% of the population will end up holding Bitcoin.
Yeah, I completely agree. And we need to be able to get to a position where they can do that being advised by regulated financial advisors.
Yeah.
I've got two sort of case studies on this, agreeing with what you've just said. So I gave a personal finance presentation. I do a bit of coaching on the side. So I sort of coach people to become their own IFAs for the 92% of the country that don't have six figures in assets under management. I want to try and coach them to be able to get there themselves.
Yeah.
One of the things I said in this presentation, it was to a bunch of self-employed, a bunch of them were tradies. And I just said, look, you're going to have a tax bill at the end of the year. You're putting money aside every month to pay your tax bill. Save it in a cash ISA. And it was like this light bulb moment to 6 or 7 people in the room, like, oh, why am I not doing that already? And I think as financial advisors, and then especially as Bitcoiners, we can often get caught up in the level of knowledge that we have that we think is just ubiquitous, and it's absolutely not.
Yeah.
And I'll give you another example of that. So in terms of creating products to meet people where they are.
Yeah.
A friend and I regularly meet another friend. We're both Bitcoiners, and he isn't.
And you're still friends.
Yeah. But we've been telling him for years, look, just buy some. And then we both got access to Strike. We weren't aware of Coin Corner. If we probably would have supported a UK business.
Yeah.
But we both got access to Strike. And then when we then next went to see our friend, we were saying, look, this thing, you can just set up a standing order and then set up a PCA, DCA strategy. And that for him, that was the moment. It wasn't that he didn't want to buy Bitcoin. It's that the friction to get there was in the way.
Yeah,
and
easy access is the only thing that matters.
Yeah. And then what surprised me, I met him about a month later and I was like, so how's it going with Strike? And he's like, yeah, I'm buying £2 an hour. I was like, wow, that's like,
specific.
But like, I wasn't expecting that. He was like, yeah, he'd listened to everything we said about, the only real or the best strategy, if you don't know what you're doing, is just dollar cost average, set up a regular purchase, fire and forget, right? And what I wasn't expecting was that it was £2 an hour, £50 a day. I said,
if anyone ever says to me, how much shall I buy? I'm like, £2 an hour. Yeah. Well, when you're happy, do £3 an hour.
Okay, so look, you've created this fund to make it accessible to the 95%, let's say, of people that are never going to get their head around the technicalities of Bitcoin. It's a really admirable thing. So then what challenges are you facing bringing that to the 95% who won't get their head around self-sovereignty? Hey team, a very quick pause. If you're a financial advisor, wealth manager, or accountant, there's a very good chance your clients have already asked you about Bitcoin. And if they haven't, they soon will. That's why I've created 2 free downloads to help you feel confident and informed and ready to have professional conversations with your clients about this new emerging asset class. Head over to thebitcoinifa.com to get 1, the 8 reasons you need Bitcoin in your personal and professional portfolios, and 2, the Bitcoin cheat sheet, a concise, jargon-free guide designed to help you go from zero to confident and knowledgeable in under 10 minutes. Whether you're Bitcoin curious or Bitcoin cautious, these resources will help you speak with clarity and confidence. It takes less than 60 seconds. Again, that's thebitcoinifa.com and enter your email address to get your hands on these free resources today. Now, back to the episode.
The regulatory environment in this country is behind most of the world. I think that's the main thing, right? So I speak to quite a few of the multi-asset managers and I'm like, when are you going to put Bitcoin in? And the answer typically is we have no demand. And the reason for that is because there's a strangulation of the demand. Because if a retail investor can't access it, well, they can't ask their financial advisor for it. And if they don't ask their financial advisor for it, the financial advisor is not going to ask the fund manager. And if you don't ask the fund manager for something, well, they're not going to think, oh, we're going to include this thing nobody's asking for just to, for shits and giggles. So at the minute, it's a catch-22 really, unless the FCA move forward and say, actually, we would say Bitcoin, Ethereum, and they could even have a predefined list of cryptos that they accept. Like, I think in Dubai they have a list of well, when we were looking at anyway, there was a list of 5 cryptocurrencies that the local regulator were happy with, and so you could go and set a fund up for those 5, and you knew where you were. Like, you knew exactly where you were. They didn't throw a blanket over all crypto saying, this one's terrible, so you can't buy this one that isn't terrible. And so that needs to change. And I think the differentiation of meme coins, like you call shit coins, the altcoins, and Bitcoin, well, there needs to be a clear differentiation between those because they're not all the same. And then once that happens and retail investors can access ETFs, then I think that just means all the capital that's sat in SIPs and ISAs will now have an ability to be demanded having a Bitcoin exposure. And that needs to be the trigger to allow there to be demand for the fund managers. And once that happens, then we'll probably start to see, like we do in America and Canada, that I think Fidelity in Canada have an all-in-one ETF, which is their multi-asset ETF. That now allocates 1 or 2%, depending on which risk profile one it is, to their own Bitcoin ETF in Canada. BlackRock are doing the same with one of their funds in America. They're allocating 2%, I think, of it to their own Bitcoin ETF. And so that's going to be where it'll end up. And that's probably how most people will get their Bitcoin exposure without even realizing. Just like now Coinbase is in the S&P 500, that will now, how many people invest in an S&P tracker? Like, God knows. Millions and millions of people globally will now, without even realizing, be a passive investor in the crypto business. And that's how it will seep into. I don't think it's necessarily the case that the individuals, the retail clients, need to say, I want Bitcoin in it. It's a case that some of them will, because they're Bitcoiners anyway. Most people that I've ever dealt with, I doubt anybody's ever been through the fund fact sheet and looked at every single constituent of a portfolio. I just can't imagine they would ever do that. And so that's why you need the fund managers and the multi-asset managers and the portfolio managers to then start to allocate to it on behalf of their clients. Because most people, let's face it, most people have got so much to do in their own life. The reason financial advisors exist is because these guys don't want to do it. If they wanted to do it, they would do it. And if they didn't want to do it, they'd let you do it. And they really, as long as they trust you, I think, and they know that, your interests are aligned, they kind of just say, all right, go and get on with it then, don't they? And I think that is how Bitcoin adoption will take place on a mass scale in this country, because it will be in everybody's portfolio without them even realizing it, because it's been deemed a necessary component to a multi-asset portfolio. And again,
Yeah,
that can't happen whilst there's a ban on ETFs, really. And I talked to quite a lot of the fund managers and multi-asset managers, and even though as the decision maker of the fund and what it invests in, that means they could invest in our Bitcoin ETF, even though if it's on behalf of a retail investor, because they're deemed to be the investor, being the decision maker, they could put it in there, but they don't because of the grey area around the FCA's rules around it.
that's a really interesting point, and I want to touch back on that in a second.
Hmm.
First, though, I'd like to touch on the irony is that an ETF like yours, which I assume has proof of reserves, you're buying, it's on a 1-to-1 basis. I buy a Bitcoin, you buy a Bitcoin and store it for me,
Yeah.
is a much, much safer way for me to get exposure to Bitcoin than, say, I'm aware of at least one platform and fund in the UK that is essentially a crypto fund. It can get Bitcoin exposure to retail. It's regulated by the FCA. It's protected by the FSCS scheme, FSCS scheme. But it's essentially buying securities with Bitcoin exposure.
Yeah.
It's buying some UCITS, some it's adding an extra layer of sort of third party counter risk,
Mhm.
but it's available to retail investors. Whereas something like yours, absolutely not, despite its direct purchasing essentially of the underlying asset.
Yeah, look, one of the great ironies for me is that my 5-year-old in her SIP and ISA, in her junior SIP and ISA, she can buy MicroStrategy. everyone watching this is a Bitcoiner probably, and they'll know what MicroStrategy is. It's a leverage play on Bitcoin, which, brilliant idea. I mean, if they can make that work long term, then what stock. But that is significantly more volatile than a spot Bitcoin ETF. But if you then break that down even further, so my 5-year-old can buy and does buy MicroStrategy in her SIP and ISA, but she can't buy my Bitcoin ETF, which is managed by a regulated manager in Guernsey, and then the Bitcoin is held in an FCA regulated custodian in the UK. Make that make sense?
So let's come back to the point that you were just making. Remind me what that was.
It's crazy that the more there's more risky things available than just holding Bitcoin in a regulated wrapper, which are allowed, right? So it's just even the exchange traded notes, right? So in Europe, there's a lot of talk about ETPs, right? And the ETP is a categorization of exchange traded products, right? So you've got in there exchange traded funds, exchange traded notes, and exchange traded commodities. So this all came about because the UCITS rules mean that there's certain things that can go in an ETF and some things that can't go in. So usually if you can't create an ETF of something, well, then you would create another product which adds a layer of something else in, but not just bypass, but satisfies the rules of another product. So the European exchange traded note market for crypto, it is buoyant, right? So it's been around for a while. There's 20 odd billion AUM in it, and people are buying it, but they probably don't realize what they're buying because all the exchange traded note providers hide behind the categorization of ETP. They call themselves ETPs. On one of their websites, it even says, or it did say, trades just like an ETF. Now, the difference is if you buy my ETF, you directly own shares in a company, which is the fund, and the fund directly owns the Bitcoin. So in a situation whereby owning Bitcoin directly isn't available to you, well, the next best thing is to own shares in a company that directly owns the Bitcoin. So if you look at then the issuer counterparty risk with us, well, it's very minimal because I don't hold your Bitcoin. I don't owe you any money. We don't do anything other than create products, have them regulated, have them listed, and then promote them. If you have an exchange traded note, you're at the mercy of the note issuer's balance sheet. And so if that business was insolvent or went bankrupt or had any issues, well, then you're somewhere in the list of creditors. Where you are in that list isn't really up to you. It's up to, say the administrator and the rules of where the money would cascade down to. But bigger companies than quite a lot of the exchange traded note issuers have gone bankrupt in the past. Like Lehman's going bankrupt was a huge, huge business. So if they can go, tits up in a bad situation, what's to say another lesser company in crypto? And the issue you've got in crypto is you could have an issuer that builds up their business as the market goes up and their costs go up, their fees go up, everything is looking good. And then there could be an almighty crash. And then what happens? So that company is really, really at risk of, can we maintain, can we carry on growing? And so if you are owed money by them because you've invested it, via their exchange traded note, will you be able to get your money back? And that is the question you don't even have to really contemplate with us. And so if all things being equal, Bitcoin's Bitcoin, right? My Bitcoin can't grow more than your Bitcoin because it's the same. If you can access it very, very quickly and easily on an exchange, great. So if you could have both of those things and take counterparty issuer risk or not, well, I would argue, why would you bother? And so a lot of the note products, they create really, really smart collateralization arrangements, which is really, really good because they've obviously a step. They realize there's a step they need to then go through to make sure the investors are as safe as possible. But if you could not bother and have the same result, then why bother? And that was the specific reason we created the fund the way we did, because there's no other exchange traded fund in Europe or any fund structure that is listed on an exchange that owns Bitcoin directly. So that's one of the reasons we went the hard way round. That's why I think, we have a differentiated approach because no other product are you directly the owner of the fund and the fund directly owns the Bitcoin.
Yeah, it's definitely the way to set it up, right? And
if you can. And the problem is there's loads and loads of rules. Like if you look at all the different European countries, Europe is regulatory fragmented, enormously. So it's not as easy. Like in America, they've got one set of rules. Like everyone, 300 odd million people can invest in products that are abide by the same rules. It's not the same over here. So it's much more difficult to just replicate stuff from other areas of the world. But if you do look at other areas of the world, in no other region do people then, as a first point of interest, set up anything other than an exchange traded fund. So if you could do a fund, you would. If you can't because there's regulatory problems with it, then you would look to do other things. But in no other part of the world do they list exchange traded notes that are Bitcoin. Everywhere else is a fund. So that, is proof that that's the ideal scenario and the best way to set it up.
Yeah, absolutely. I completely agree. Especially with the difficulty with tax wrappers. I think we're going to be a long way until you can hold your own spot Bitcoin within your tax wrapper.
Miles.
And so the ETF, if I could get my hands on your ETF within my SIP and my ISA, I absolutely would.
If you could
So,
qualify as a professional investor, as deemed by the COBS rules we were discussing earlier, and you could get your provider to agree that you're a professional investor, well, then you can. But it's very difficult to get the providers to say, okay, well, we'll deem you as an individual differently to everybody else because their market is looking after loads of people. And so what we find when we talk to a lot of the providers is that because they have quite a lot of retail investors on their platform, albeit some professional investors too, they can't list anything because it therefore would be accessible by the retail investors. So that's why there's basically a blanket ban in this country on any product like ours being sold, even to institutional and professional investors.
oh wow. So talk me through that then in a bit more detail. Like, if I'm this is aimed at IFAs and financial advisors. If I'm a financial advisor, I look after clients, I employ a DFM, let's say.
Mhm.
Can I get access to your ETF for my clients?
So if you have a discretionary fund manager making investment decisions on behalf of the investors, who may happen to be retail investors, well, then the fund manager is the client, effectively. So they would be a professional. So they would be allowed to buy our ETF in a portfolio which would then be sold to retail investors. If you were a per se professional investor, so you've got a certain level of income, you've got a certain level of assets, you've got a certain history in trading cryptocurrencies, could then be deemed as a professional investor. And so if you went to a more bespoke wealth manager or stockbroker, they could classify you as a professional investor, and therefore they could let you buy your Bitcoin ETF. So, for instance, I buy my Bitcoin ETF because I qualify as a professional investor given what I do. So it isn't impossible for professional investors to buy a Bitcoin ETF. It's just quite difficult to find a platform that would allow it because most platforms try to cater for mass market and not bespoke high-end professional investors.
Okay, so then two questions that throws up. Let's answer the shorter one first, which is are you able to name any platforms in particular that do allow it?
Well, I use LGT. So LGT is a wealth manager I've known for years because in my financial advisory days we used to use their services. The investment manager there knows me, so he knows my background. He knows what I've created. I went through. It was quite fun actually because the compliance team need you to fill out a questionnaire regardless, right? So one of the questions was about, I can't remember what the question was, but it was about do I understand the ETF trying to buy into? I was like, I made it. Like I was very involved in the
I hope
creation of
so.
it. So I get it. And then, but my investment manager there, he was like, just fill out the form. I was like, okay. But you could declare yourself if you qualify under the COBS rules and the compliance team at the brokerage you use accepts you're a professional investor. Well, they should then be able to buy crypto exchange traded products for that investor. I think Killick do it. Um, I don't really look at many others because I use LGT. So there's a few platforms that do it, but you need to go to somebody. You can't do it on Hargreaves Lansdown. You can't do it. Most pension providers won't allow it because they're mostly retail investors. But if you go into certain areas and you are a professional investor and you use a service that is aimed at professional investors, then you would be able to ask them and say, look, I qualify. I think. Can you give me whatever questionnaire your compliance team needs me to fill out? And then you could access our Bitcoin ETF.
Okay. But then for the vast majority of IFAs, if they are employing a DFM that isn't one of the two that you just named, would they be able to approach their DFM and
Yeah,
create demand and say, look, we want you to create a fund that's 98% global equities, let's say, and 2% Jacobi's Bitcoin ETF. For,
yeah.
you
So
know,
there would need to
I'm
be
not
enough
pushing
demand.
your ETF, but
Yeah,
if they wanted to,
yeah.
they could ask their DFM to create that fund, and then they could recommend that fund to their clients.
Without a doubt, yeah. So what you would need to do is make sure there's enough demand for the discretionary fund manager to set it up, because setting up a fund is, it's a big task. It costs a lot of money. It's quite arduous. You have to then create all sorts of things in the background. But under the current FCA rules, I'm not aware of anything that would prevent a discretionary fund manager putting 1 or 2% allocation into a diversified portfolio that could then be sold or advised to retail.
Okay, so there is the opportunity for IFAs to create that demand in that chicken and egg situation that you were
Yeah.
describing earlier.
Yeah, so the IFAs could. I think if a load of IFAs came together and said, "We have clients that have demand," they could then go to a discretionary fund manager and say, "Look, we've got all these clients that have got demand. Um, we think an allocation to it is sensible, and we've gone through the advice process. We understand what these people's risk profiles are, their capacity for loss. We've explained, all the things they need to explain. Then there's nothing to stop a fund manager creating that. But again, there needs to
And
be the demand, right? And that's
yeah,
the
of
thing we don't
course.
have as vastly in this country as we do in others.
Well, that's
That's your new task, right?
yeah. That's why we've been created, right? Is to help educate and inform financial advisors, and then hopefully at some point down the track to start generating that demand from the FCA,
Yeah.
right? Because I've recognised a long time ago that we're in that chicken and egg. Clients aren't demanding it, so financial advisors aren't demanding it. So the FCA are in no rush to regulate it because they perceive it to have no demand. And I think that kind of feeds into it's a combination of headlines, negative headlines. The kind of people that are already in Bitcoin are going to probably be the self sovereignty. You know, there isn't that much demand from retail to have it within their ISAs and their SIPs, despite the fact that they probably need it because even if we just come on to cost, the additional cost, like of creating a fund from a DFM probably means that it's going to be a higher fund cost than another AN other. Also, you'd then have the DFM fee. But when Bitcoin is growing at 62% ARR, if that was an existing fund, you'd be piling your clients into it. So the reward, potential rewards based on historical performance of Bitcoin should mean the delta or the arbitrage for any additional funds are far outweighed.
Yeah, I think if you look at what the guys at Cartwright did with a pension company, their allocation from the pension to Bitcoin, they modeled it on if you did X allocation and it went to zero, your payout would end up being, I think, 3 months delayed from where it would be now. If it went like we think it's going to, you'd be at 2 years early. So if you model those scenarios, and the worst case scenario is uh, it takes 2 months more to get a 10-year investment back to where it should have been, or it gets there 2 years early, well, is that not worth the risk?
Yeah, yeah, absolutely. The asymmetric upside
Yeah.
from Bitcoin.
And
Yeah.
what I
So
love, I created a chart recently, actually. I didn't create it myself. I saw it somewhere else. I thought I'd create a version of it. And it showed the lows every year. And it's such a good way, in my opinion, to look at, well, what's the worst case scenario? Well, what's been the worst case scenario every year? And every year, up, 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 up. And so if you focus on what's the worst that could happen, and then we look at that, well, let's look at what's happened in the last however many years. And you can see like there's slow, gradual progression. Even the lows are higher every single year. And so that is one of the ways I would look at it is, where are we now? So we're obviously at a high now. Great that it popped last night. But if you look at what's the worst case scenario every single year, am I comfortable with that? Then, a long term allocation, it doesn't matter if you're buying in at the top, if you're buying for 20 years, right? So if we want to get people to start picking and choosing a time in the market, well, that's trading, right? We're not, that's, for most people, that's gambling. If you're looking at a long term 20-year investment, if you buy in now, you won't worry about it being at 110,000 or 111,000 when it's at a million. But if you're then comfortable that the low of this year is where it might then get to, then make an allocation.
Completely agree. I like to use the 200-week moving average in my
Yeah, yeah,
presentations to IFAs,
absolutely.
and it's never gone down. It's only ever gone up and to the right,
Was it
which is proven by
46 now, isn't it?
if you've bought and held for 200 weeks, it has 100% hit rate of making money at any point throughout Bitcoin's history.
Yeah.
So for in the financial advice world, we want the ideal client is coachable, teachable, low time preference, and thinking in decades. And if you zoom out and think in decades in Bitcoin, it really doesn't matter when you get in. The only thing that I do like to say is it does have an observable 4-year cycle. And you just need to be, we're not traders, but you need to be aware which year you're in if you're allocating in year 3, because we typically get 3 years up, 1 year down. And if you're allocating in year 3, you just have to manage client expectations that we may see a 50 to 60% drawdown next year, but we're thinking in decades.
Yeah, I think that 4 year cycle, I think that's going to change. I don't know. I don't know if it goes, but I think the access that there now is to Bitcoin via the American ETFs, via the Bitcoin treasury companies, via strategic reserves. There's such an amount of capacity for inflows that if I were a country, you know, and I was going to buy an absolute ton of Bitcoin, I'd probably have a buy order, I don't know, 10 or 15% below. And so as soon as Bitcoin gets to that, well, it's going to bounce back. And so I think that if you look at any technology, it's usually invented by, like, I don't know, the CIA or NASA. Then it would get adopted by governments and then big corporations, and then it gradually feeds its way down to retail investors. And so the big demand for it is already taken. So the big demand would be countries, governments, big corporations, but Bitcoin's flipped the other way around. So if you think of Bitcoin investors from the very beginning, well, they were computer scientists and freedom fighters, and for the want of a better word, computer nerds. And I don't say that in a derogatory way. I love computer nerds. Some of the computer nerds I've met in this industry are the most phenomenal people I've ever come across in my entire life, and they do this stuff for the betterment of the world. I mean, they're probably incredibly rich off the back of it, but they'd have done it anyway. And then once you then start to think, well, retail investors got in, then some very, very early fund managers got in, but only now, 16 years in, are the big corporations, the countries, and the big, big demand. They're only now coming in, and we've only got 5% left of the Bitcoin to be mined. So the flows in the next decade are going to absolutely dwarf the flows in the previous decade. And so I think if you've got a finite asset, what's that going to do to it? So I think the 4 year cycle, which could be based on the halving cycle, could it be based on M2 global money supply cycle? There's arguments for all of these things, but I think either way, there's more and more demand of it. They already buy significantly more than is mined, and there's only ever going to be 5% more mined. So 95% of the Bitcoin that you can buy or sell is already in circulation. So God knows where it goes, but I'm pretty optimistic.
I completely agree. We are 3% global adoption. It's the equivalent of,
Yeah.
I think it's the equivalent of
I think it's
online
internet in
banking.
1999.
Is sorry?
I think I saw the other day it's like internet in 1999.
I think I saw it's Internet 1990, online banking 96.
Really?
This is from River, a
Oh,
River
really? Yeah,
presentation,
they
but
do
I
some
think it
great
was a
stuff.
few months ago now.
Yeah.
Um, so we're still in early adopters. We're not even in early majority, and it's typically with any technology you see the largest returns in that S curve in the early majority. So I completely agree with you. I still think the 4 year cycle will hold to an extent because of because it's it is a combination of mining cycle, halving cycle, M2 cycle, business cycle. So I still think we will get those pullbacks around the refinancing times, which we're entering now.
Hmm.
500 days after the halving, because the miners create a supply shock. But I think the volatility to the downside that you've just spoken about, that's where we'll start to see the limiting of
Yeah,
that,
yeah, I agree.
because there is going to be this underlying demand that, you're right, anytime it drops 10%, 15%, 20%, people will just hoover it up.
Yeah, absolutely.
Unlike previously, because especially on previous cycles, it was essentially retail selling to retail. It
Yeah.
was just the retail that got in early was selling to the laggards that come in at the end of each cycle. Whereas now it's institutional nation state adoption, and they will hoover it up from anyone that wants to give it up.
Absolutely. Absolutely.
Okay, Pete, I'm wary of time. We always like to close this. So, firstly, thank you. It's been really enlightening for me. I don't know too much about ETFs, ETNs, ETPs, or didn't, and now I do. So, thank you for
You're
that.
welcome.
We always like to close this podcast with the same question, which is: so beyond number go up, what's one positive thing that Bitcoin has brought to your life?
Hey team, just a quick pause to say a huge thank you. You've given us your most precious assets, your time and your attention. And honestly, it means the world to us. If you've enjoyed this episode or you take value from these conversations, it would really mean a lot if you could like, comment, or subscribe. Those things really help the algorithm and they help the channel to grow. And if there's someone in your life who would take value from this, maybe a fellow advisor or someone just curious about Bitcoin, please send it their way. You never know what it might spark. Okay, back to the studio.
Oh, only one? Yeah, I think the awakening of what money is, because beforehand, um, I just got on you just get on with your day, right? You get paid, you invest it, you save it, you don't really question money supply. And I think if you look at Joe Bryan's brilliant video on what's the problem, I would never, I don't think, even as a finance kind of guy, ever really got into the weeds of money supply and the problem with fiat currencies. Um, and I just see that if you can go to work, earn money, get taxed on that money that they can print and just make it. Why are you taxing me? Don't tax me. Just make more. If you need more, leave me alone. Just tax. Don't do both. But I think I would never have gone into the weeds of what is money had Bitcoin not be brought to my attention. And I think that gives you, I don't know if you've ever read Rich Dad Poor Dad, right? That's an awakening moment. And so I think Joe Bryan's video on what's the problem, which hopefully, if you've got the technological capabilities to put that link into this podcast, I'm talking about it.
It's always a link in the show notes.
Yeah,
Always.
and it should be, because it's such an education, and I absolutely would never. I doubt it would ever have crossed my mind, and the reason, because I would go to work, I would help my clients out, I'd help them try and grow their assets, I'd try and make money for me and my family, and then when I'm at home, I like to spend time with my kids doing stuff. I don't really sit there thinking about what's money. And I would say most people I've ever met, even financially savvy people, would probably never have questioned it. And I think that's the thing that probably is the main takeaway from me in Bitcoin. And the other thing, I think I probably would never have got into this industry if I wasn't asked to get into it by some people I was working with. But what this industry has given me in terms of a network and a platform, it is incredible. Like I've been to some amazing places. I've met some amazing people. So regardless of the price of Bitcoin, I've been thrown into the deep end almost of a global industry that's a movement that I can't really think of many things that's ever happened like it. Because if you look at the Bitcoin treasury companies, for instance, there's a lot of talk about, are they in competition? And the answer is I think they are, but it doesn't matter, because if one wins, they all win. So there's not many situations where you'd almost want your competitor to do well, because that's going to increase the price of Bitcoin and you've got a load of Bitcoin. So it's a very unique thing that I found myself, right in the middle of, which, I probably wouldn't have, because I would have been happy being a financial advisor for the rest of my life. And I would never have been exposed to all this other stuff. But yeah, I think there's so many things, but those are the two for me. I think the awakening and the new people you have into your life.
It's great answers. Yeah, completely agree. The community is incredible.
Phenomenal.
You're the second guest to use the term awakening. As I say, the link to Joe Bryan's "What's the Problem" will always be a link in the show notes to this podcast. And you're completely right on the what's money, because the way I like to think of it is, even if, regardless of the taxation side of it, if you and I are playing a game of Monopoly and I'm trying to earn money, but you can just take money
Yeah,
from the bank whenever you like,
I'm going to
I
win.
don't want to play that game anymore. And you are definitely going to win, but I don't want to play that game anymore. And Bitcoin offers that solution out of that game.
Yeah, and I think if it doesn't offer a complete solution, I think it makes governments aware that, hold on a minute, like we can't play this game anymore as much because the people are more aware about it. So I just think it's only a good thing to be transparent, because the only reason you wouldn't be transparent is if you're doing something wrong. So I think the transparency of it brings a whole world of honesty, right? So it has to. And so I think that's a really, really good thing for the world.
Completely agree. Pete, if people want to get hold of you or follow you, where can they?
So I'm pretty active on LinkedIn, so it's you'll find me, Peter Lane at Jacobi on LinkedIn. Our website is jacobiam.com. Trying to increase my Twitter profile, but I'm a bit old for it. I think all the youth are much better at it than me. But I'm trying to grow that anyway, because it's such a great place. That's such a great crypto community on Twitter, X, whatever they want to call it. But yeah, Jacobi, LinkedIn, we're around.
Great. Thanks, Pete.
Thanks for having me.